This is Techne Corp with
Restart.
John.
yeah.
Restart.
We can trim it. So starting now.
This is Techne Corp
John.
Emmanuel.
And Travis.
and Max.
Our mission statement is to provide new and innovative technology in a way that is conscientious of delivering value to all customers, employees, suppliers, and shareholders.
Regarding the past performance of Techne Corporation, we would like to start off with the positive note. The segment that we have had continuous success in since the beginning of operations has been the traveler market. We had 37% market share in the second quarter and 65% market share in the third quarter of the traveler market. Also, as we had hoped, we earned a positive net income in the third quarter. The second market that we targeted was the Mercedes market. Unfortunately, we had a couple setbacks within the first few quarters of this segment that we took notice of. The first problem was a poorly designed brand for the Mercedes at market introduction. We only received a demand of 11 units, which really hurt us in the kickstart against our competition. After these extremely poor results from the market about customer demand for our Mercedes product, we figured out how to turn that unsatisfactory feedback into a positive. We took notice of what the market did not want, and with that, we were really able to focus on designing a brand that would better fit the market, which worked out in our favor because we grew substantially in the third quarter to a market share of 54% in the Mercedes market. Proceeding with the commentary on market share, after the third quarter, we were leading market share in both markets, but our revenues did not reflect this percentage share. After looking for reasons why, we found the root cause as to why we were losing out on so many sales. It was due to factory productivity. We lost out on a huge number of units in sales, and we were not getting near our operating capacity due to the productiveness of our factory workers. This was another lesson that we had to learn in the jump start of our business, but luckily for us, we had our setbacks in the beginning that we were able to learn from rather than face them at the maturation of our company.
To start with strengths, as you can see on the graph, we're the only company who is consistently gaining market share. We have done this by cornering the Mercedes and traveler markets. Our brand, in terms of the world market, in terms of ratings, the Mensa 140, our Mercedes computer, is ranked second in its class. Our Passenger Pro, our traveler computer, is ranked second as well. Also, as you can see in terms of demand, our Mercedes and traveler brands are both the most demanded, combining making us the highest in demanded company. For weaknesses, one of our recognizable weaknesses is our factory productivity, which is at 66.52%. However, we are combating this by increasing factory worker salary, health benefits, vacation, and pension, all above industry averages as shown on the slide. Two areas that were most important to the factory workers, this being salary and health benefits, were raised more so. However, despite this, our company still scores best in total performance for manufacturing productivity. For opportunity, we see that our company could have made many more sales if we didn't lose them to stockouts as shown. Now take this in account with the fact that our demand per salesperson has risen dramatically. This happening even though we are tied for first in number of salespeople. With an increase in manufacturing, we can convert these lost sales due to stockouts into positive sales. Combining this with an increase in salespersons to satisfy their demand, we predict very high sales in the future. Threats: since we have increased spending this quarter, there is an inherent risk regarding how the results will turn out. For example, if the workhorse becomes much more suddenly in demand, we could have very large stockouts, draining us of money as inventory. Also, our competitors may shift their focuses to the Mercedes and traveler markets since the workhorse wasn't very demanded last quarter, which would increase our competition.
So marketing in Q4, we decided to keep everything in the travelers market the same. because there's not going to be any type of new innovation coming out of there, and there wasn't much that our competitors were going to do that we couldn't do. So we decided to leave that one alone. But in the Mercedes market, we wanted to understand that market a little bit more because, as you can see below, the Mensa 140 was rated a 92 when it came to price. So we think we can do a little bit better than that. So we wanted to see what that price number was. So we created Mensa 33, and what we did was reduce some of the features. Instead of a 24-inch screen, we made it a 19-inch screen, and we just made it still high performing, but not as flashy. So yeah, we did that, and we set the price at 3,700 to see how the market reacts to that. So the Mensa 33 is a test for our upcoming markets. So like with our new R&D, we decided to invest in a new case for the travelers market to make it more portable and more stylish for them, because that's very important to them. And then we also invested in computing power to continue to be ahead of the curve and for Mercedes. And we also invested in sustainability because we're forward-looking. We plan on being here for a long time, so we want to make sure that we're winning in that department too. So we invested in that. And what we expect in Q5, we expect to have about 80% of the travelers market, and we plan on doing that by using our new research to create new products to continue to lock down the travelers market. And we also plan by Q6 to gain 80% market share of the travelers, of the Mercedes market. And we plan on doing that by gaining as much information as we can in Q4 and Q5 so that we can further lock down the Mercedes market. So in Q5, we will have 2 to 3 new products depending on our results, but Travelers and Mercedes will for sure get a new brand. And in Q6, Mercedes will get a new brand. So in terms of opening up sales markets, or sales offices, we decided to move down to Shanghai. We moved to Shanghai because our competitors are not there, and that's our second largest market for both Mercedes and Travelers. And we plan on employing just about around the same amount of people as we did initially in the Chicago office. So we will probably have about half that the workforce at Chicago. And then in Q4, we also hired more salespeople for the Mercedes market because we expect to have higher demand in that area. And we also invested more in customer service. So each office got a new customer service rep.
Moving into manufacturing, in quarter 4, we're introducing a new product, Mensa 33. While we are introducing this new product, we are also keeping previous products like the Passage Pro, Passage Pro X, and Mensa 140. We believe that having the 24 salespeople on staff while selling 150 units per person can give us a good operating capacity. We think that an operating capacity of 150 units per day is realistic based on previous quarters. We believe this because our last 2 quarters had huge increases in demand. Most notably, our last quarter had lots of stockouts. We tried to fix this by hiring more salespeople. We also increased fixed capacity by 25 additional units going into quarter 5. We are taking this aggressive strategy in hopes of increasing sales, while also increasing market share and customer satisfaction. For quarter 5, we plan on continuing with this strategy. This time we are predicting demand per salesperson to be 150. Our total product demand comes out to 4,800 units. This gives us an operating capacity of 74 units per day. We are also trying to maximize as much of our fixed capacity as possible. We need to be strong and aggressive because the technology industry is changing fast and our competitors are not going to let up. For quarter 6, we have 100 units of fixed capacity. We hired 8 more salespeople, which brings the total sales force to 40. We predict that like quarter 5, each salesperson can sell 150 units. Knowing what we know now, we predict operations capacity to be 92 units per day. We believe that we can sustain this moving forward, given that we come out with new and innovative products.
We are extremely optimistic about the future cash flows of this business because we have put almost all of our assets into investing for the future. Quarter 5 and 6 are going to have extremely high volumes in sales because we have put in $4.7 million into research and development. We spent that high dollar in order to get the information back by quarter 5 and hit the ground running. We spent $1.95 million on system improvements. We have obtained 3 sales offices by now and have expanded our plant capacity up to 100 units per day. Therefore, our projected revenues for quarter 5 and 6 are substantially higher than the previous quarters. Once again, because we have invested everything in the early stages of the company in order to see major growth down the line. Projected revenues for quarter 5 are $16,929,600 with a net income of $5,745,819. Quarter 6 is looking even better with revenues of $20,192,075 and a net income of $6,069,135. With these projected financial statement numbers in mind, our company is going to be setting our asking price at $100 per share. We are going to be earning $67 per share and are using a price earnings multiple of 10 to get us a total share value of $670. With our price set at $100 per share, you will earn a return on investment of 570%. Our company is only looking up from here, and we want you to be a part of it.